The company recognizes revenue on the basis of cost incurred to date. So this is regarding, looks like it is regarding revenue recognition, and they recognize revenue on the basis of the cost incurred to date as a proportion of the total expected cost. Okay, so we need to take this thing like total expected cost. How much is the total expected cost? And we will see how much is the cost incurred, and we will take the proportion, and then we will recognize revenue. The following details apply to a contract where performance obligations are satisfied over time. Over time. Performance obligations are satisfied over time at 31st December 15. Okay. 31st December 15. All right. So we have total contract revenue, cost to date, estimated cost to completion, amounts invoiced, amounts received from customers. Okay. Total contract revenue is 120,000. Cost to date 48,000. Estimated cost to completion 48,000. Amounts invoiced 5,400 and amounts received from customers 40,000. Okay. Mhm. Let me change this format to financial, no decimal places. Yeah. So total contract revenue is 120. Cost to date, it is important. Estimated cost, total expected cost is how much? How much is, I think estimated is this. So total, if we take uh, total estimated cost will be cost to date plus how much we are going to incur further. Okay, 96,000 is going to be total estimated cost. Okay. All right. So as we discussed, these two things are going to be important. So what amount should be recognized as a contract asset? Contract asset means what? Okay. What is the contract asset? So what is the percentage? We said no, that proportion we will calculate the proportion. Cost incurred to total expected cost. We will calculate the proportion. So 48,000 is cost and this estimated is this. So if we see the percentage, 50% is, um, we can recognize the revenue, contract asset we will see, but we can recognize the revenue for how much? Total contract revenue multiplied by 50%, 60,000 will be the revenue. How much they have billed? They have invoiced 50,400. Okay. So contract asset will be revenue recognized minus amounts invoiced. Okay. So 9,600 will be the answer for it. It is revenue recognized. So you are recognizing revenue 60,000, but you have billed how much? 50,400 only. So the difference between these two. So these two we need to look at together. I will color this like this amounts invoiced and revenue recognized. We will compare these two. Okay. And cost to date and total estimated cost. This we will calculate the proportion. Total estimated cost, cost to date. We will calculate the proportion between cost to date and total estimated cost. We got this 50%, and then we see that out of total revenue, how much is, 50% is our revenue recognized. but we have billed for, we have sent the invoice for 50,400 only. So 9,600 will be our answer. First will be the answer. Um, Question number 81. So it is asking identify the adjustments required to correctly account for the government grant. So when you receive a grant, what will you debit, what will you credit, and what will be the amount? So the options are already given here. So at 31st December 15, they are asking. So now we need to read the facts, what has happened. Okay. So the journal entry, the ask is to tell what will be the journal entry at 31st December 2015. Yeah, yeah, 31st 15. This is the ask. All right, Broom Company successfully receives a government grant of. So government grant received 15000000 1.5. Let me change this accounting format to financial. Yeah. So government grant received 1.5 million on what date? Okay. So they received this on. I want to keep the date somewhere. They received this on 1st July 2015. Okay. On 1st July 15, government grant received 1.5 million. The machinery is depreciated on a straight line basis over its 10-year useful life. 10-year useful life. As Broom Company has incurred the expenditure on the asset, the accountant has recognized the full amount of the grant received as other income in the year 31st December 15. Oh, so on this period, what the accountant has done, mm, he has recognized this as other income. So he has credited other income. Okay, this is what accountant has done. Company policy is to account for all grant received as deferred income. So this is what has been done. So this is the incorrect thing that has been done. Okay, company's policy is to, you know, recognize is at deferred income. So what should have been credited? Deferred income should have been correct. This is the correct thing to do. Okay, but they have done this thing. Hmm. So we will reverse. It should have been credited. It is not credited, so we will credit it. Nothing should be done with other income, but it has been credited, so now we will debit it to reverse it. You know, what will be our correction J? Our correction J will be this one. We will credit, right? And other income we will debit. But this they are asking on which day? 31st December 15. There is one catch here. Although they received how much? 1.5. They received on 1st July 15. So for 6 months it was correct. Like with the 6 month amount, other income should have been credited. 1.5 million over 10 years, okay? Because 10 years is the useful life. So yearly amortization, or how we are going to accrue it. So divided by 10. So 150 yearly. And till 31st December, how much you should do? Half of it, because it is just 6 months. So 75,000 we should have put to other income, but instead we put all to 1.5 million. So what we need to reverse here is we will do credit. So we will take 1.5 minus 17. Only this we will reverse, because 75,000 we should have credited as other income. So that is fine. Okay. So debit this, uh, credit this with 1425.